So this is all about your basis of time. Before you going for your sources of finance, you have to evaluate whether it is for short term, whether it is for long term. Short term finance normally comes under less than 1 year, like your trade receivables, debentures, term loans, venture funding, asset securitization. So you have invested as an equity shareholder. That is called venture funding. Hello everyone, I am your Adarsh sir, lecturing Vidhyaashram First Grade College, the Temple of Excellence. So, we are in the session 3 of your topic called Financial Management. Under Financial Management, we are in chapter 1, that is Introduction about Financial Management. Now, in this Financial Management, we have done with your theory part, but the last and most important part will be sources of finance. Now, so what do you mean by sources of finance? How many types we have in sources of finance? What is sources? Each and everything we will learn in today's session. So this will be your agenda for the day. The agenda will be very simple. The first thing will be sources of finance. Then medium-term finance, long-term finance, short-term finance. So already you got to know how many types we have in sources of finance. Under sources of finance, we have 3 types. Those are medium-term, long-term as well as short-term. These are the 3 terms we have in sources of finance. And 101% sure short question for your examination. Normally it comes for 15 marks, or else it may come for 10 marks. If what is financial management objectives and role of financial manager? If it is asked for 15 marks, this will come for 10 marks. If this question comes for 15, then your financial management basic will come for 10. Similarly, it will be vice versa. One will come for 15, one will come for 10 marks. Now, introduction. So, before we go to sources of finance and types of finance, we'll understand what do you mean by sources of finance in this. Sources of finance for business are equity, debt, debentures, retained earnings. So, normally we have, so under sources of finance, we have equity, we have debt, we have debentures, we have retained earning. Now, term loans, there is one more thing, working capital, one more, then letter of credit, euro issue, venture funding, etc. Each and everything I'll explain you while doing the sources of finance table. Now just you understand, these are the part of your sources of finance. Out of this, few from long term, few for short term, and few for medium term sources of finance. Now, these sources of fund are used in different situation. The situation differs, but we can use these kind of finances. Now, they are classified on the basis of time period. Means on the basis of time we can classify, like, so up to 1 year we can call it as short term. 1 to 3 years we can call it as medium. Above 3 years we can call it as long term. Normally long term starts from 5 years. If it is 5 years, this will become 1 to 5 years. Above 5 years we can call it as long-term sources of finance. Now, time period, ownership. On the basis of time period and on the basis of ownership also we can classify sources of finance. Now, and control. The sources of generation, it is ideal to evaluate each source of capital before opting for it. So, it is very important. The sources are generation, it is ideal to evaluate. Evaluate means what? Calculate each source of capital, each and every source of capital before opting for it. Before you going for your sources of finance, you have to evaluate whether it is for short term, whether it is for long term. In detail, we will understand while doing the table. So these are your chart for sources of finance. First you take down the screenshot because I'll scratch everywhere. That's why before that, if you want, you can take screenshot, very useful. Later we'll discuss on this. Now, so I'll give you a brief introduction about these things. Later in detail we will learn. And so whatever it is there on the screen, it is only for your understanding purpose. In your examination, the pattern of writing your answer will be different. That is given in your FM notes. Now, under sources of finance, we have long term, we have medium term, we have short term. This is classified on the basis of time. Now, as I told you, anything which is for less than, anything which is for less than 1 year, we call it as short term. Anything which is less than 1 year, we call it as short term. Then medium term, anything which is 1 to 5 years. Anything which is 1 year to 5 years, we call it as medium term. Now, 5 and above, 5 and above, we call it as long term. Short term, medium term as well as long term. Hope you understood. So this is all about your basis of time. On the time basis, we have classified into 3. Under individual, what will come? We'll understand. Now, first we'll go for your short term, then we'll come to medium, and then we'll go for long term. I'll just explain you in single word so that if you want, you can write down. Now, trade credit. Trade credit means very simple. You have, for everything I'll give you example. Please write down so that while reading this chart, you can understand what does it mean. Again, I'll repeat. For everything, I'll give you one example. You write down there itself so that it is easy to understand what it is. Like in short term heading, below that you write down trade credit. Whatever example I'll give you, just write down so that you can understand everything. Now, first one, trade credit. Trade credit is very simple. You have sold goods, but you will collect money after 2 months, after 3 months. That is called trade credit. Whatever sales and purchases happens on credit basis, we call it as trade credit. So, I sold some goods. I have given you 3 months time. After 3 months, you have to pay me that amount. That is called trade credit. Hope you understood. Normally, it is short term because for 3, 4, 5, max to max, it will be 6 months time. So, we call it as trade period. Second one, short term loans like working capital loans. What is working capital? For your day-to-day business, whatever money required, that is called working capital. Again, I'll repeat. For the day-to-day business, what is money required is called working capital. Small expenses, your coffee, tea, traveling, fuel expenses, small petty expenses are there, no? Those kind of expenses, what we spend is called working capital. If you have shortage for working capital, if you have shortage in working capital, you borrow money from outsiders for 1 month, for 2 months, for 3 months. That is called as short-term loans. You want to purchase raw materials, or else your production will stop. You go to your friend, you borrow 5 lakh and you promised him that after 2 months I'll pay back that 5 lakh. That is called short-term loans like working capital loans. Hope you understood. This is done. Next, fixed deposit for a period of 1 year. If you have 5 lakh rupees, you'll go to bank, you keep it as a deposit for 1 year so that 5 lakh will become around 5 lakh 10,000 or 5 lakh 20,000 at the end of the first year. That is called your fixed deposit for period of 1 year, less than 1 year. Next, advance received from customer, like few things like your mobile iPhone 12. If you want to book your iPhone 12, it is around 1 lakh some odd. Now, if you want to book that mobile, what you will do? It will release in the month of December, but you want booking. So in the December, getting that mobile is very difficult because too much competition and too much bookings are there. That's why what you will do, you will pay 10,000 as advance. Once you get that mobile in December, you will pay the remaining amount. Uh, Before getting the mobile itself, you have paid 10,000. That is called advance received from customer. One more example. So you want to purchase a Royal Enfield bike. You want a specific color, but the stock is not available. So what you will do, out of 2 lakh is a worth of vehicle, you pay 25,000 as advance. So as soon as they get the stock, you will get the bike. But before receiving bike itself, you already paid 25,000. This is called as your advance received from customer. Hope you understood. Next, creditors. Creditors, it is nothing but your trade credit only. Creditors means what? You have purchased, you have not yet paid the money. You have taken 3 months time. After 3 months, you go and pay your money to creditors. That is easy. Next, payable, almost similar. Factoring services. Factoring means mediators. Normally what happens in factoring means, for example, you sold some goods, but the payment will be collected after 3 months. Concentrate. You sold some goods for 3 months. After 3 months, you will collect money from the customer. But in return, customer, what he has done? He has given you some document like check or something he has given. Now, you cannot wait for 3 months. What you will do? You will go to outsiders like financial lender. You will give that customer check to that financial lender. You will collect your money. Like 10,000 I am supposed to collect from you, but out of 10 I collected 9,000 from money lender. So after 3 months, money lender will come to you. He will collect 10,000. That is called factoring. I'll give you a simple example like, so this is me. This is customer. I sold around 50,000 worth goods. I sold worth 50,000 goods. In return, what customer gave me? Check. So saying that after 3 months, you go to bank and clear your check. Now, this is bank. I cannot wait for 3 months because I have emergency. I cannot wait for 3 months because I have emergency. What I will do? I'll take this check. I'll go to bank. I'll request bank. I cannot wait for 3 months. You give me money now itself. What bank will do? Bank will agree. Bank will give him 45,000. If you want after 3 months, I'll give you 50. If you want now itself, I'll give you 45. So happily bank agreed. Bank gave me 45,000. Now you gave me check, but check is with whom? Bank. After 3 months, bank will wait up to 3 months. After 3 months, I will not come to you. Bank will come to you. Bank will come to you. Bank will collect 50,000 from you. Now, how much bank collected? 50,000. So, how much bank gave to me? 45. For waiting for 3 months, bank will get 5,000 profit. This is called as factoring. Others, bills discounting. We also call it as bills discounting. Hope you understood what is factoring. So bill discounting almost same to same. These are called as short term. Normally these things happens within 5 or 6 months. Hardly max to max within 1 year all the transactions will take place. Now once you're done with short term, then we'll go for medium term finance. Now what do you mean by medium term finance? Under medium term finance, you have preferences, debentures. You know what is preferences. We'll go in detail in cost of capital chapter. We'll not spend much time on preferences. Preference shares means which are the shares which have more preferential rights than equity shares. Like company got profit means first they will share profit to preference shareholders, later they will give to equity shareholders. So preference shareholders always have more preference. Now debentures, nothing but loans. Like you have taken loan, for that they will give you a certificate called debentures certificate. Now medium term loans, financial institutions, government, commercial bank. These are called as medium term loans. Then lease finance. What is lease finance? I'll give you some asset for 10 years. Every 10 years you have to pay me some money. Like every year 10,000, 5,000, something like rent. So after 10 years I'll take back my assets. So that is called lease finance. Others, in lump sum I'll give you 5 lakh. Give me that machinery, I'll use it for 10 years. After 10 years, you take back your machinery. That is called lease finance. And the last part in medium term is hire purchase finance. So hopefully you have already done hire purchase in your first year BCom or B.B.A. Now, hire purchase means what? Like the machinery value is 10,000. Now, every year I have to pay them 1,000. Now, after 10 years, the machinery will become mine. Clear? The machinery value is 10,000. Up to 10 years, every year I'll pay them 1,000. After 10 years, the machinery will become mine. That is called your hire purchase finance. Clear? Yes. So these are called as medium term finance. Now, the first thing is long term. As I told you, anything which is more than 5 years, we call it as long term finance. Now, equity preference, you know that. Internal accruals. Internal accruals means few sales you have done, you have given them 5 years time, 6 years time. That is called internal accruals. You have given some loan to your some directors. Director promised that after 6 years I'll give you this amount. So those are called as internal accruals. Then debentures are bonds, you know that. Term loan means time, like 5 years term, 6 years term. You have taken loan from bank for 20 years. You have taken loan from some institution for 25 years. All we call it as term loan. Venture funding, very important. It is a small business. There are group of investors. Everybody has invested, keeping in mind that this company will grow bigger. This company will give you huge profit. So you have invested as an equity shareholder. That is called venture funding. Keeping in your mind that it will boost, it will boom, like it will give you more profit. Like that, if you invest, we call it as venture funding. Now, asset securitization means you want 10,000 loan. What you will do? You will take your bike, you will give to the financier and saying that keep this bike, you give me 10,000. I'll give you after 5 years, then you give me back that bike. That is called asset securitization. Or else you have taken a machinery worth rupees 1 crore. So you want loan from bank. You will keep your asset for 10 years as securitization. If you did not pay the loan, then the company will come and take back your machineries. That is called asset securitization. The last part, international financing. What are the international financing? Like euro issues, foreign currency, loans, ADR. So ADR means American Depository Receipt. GDR means Global Depository Receipt. It is nothing but your stock market. Being in India, if you want to invest some American company shares, that is called your Global Depository Receipt. Being in India, you want to deposit or invest money in foreign companies. That is nothing but your ADR as well as GDR. Hope you understood the basis of time, long term, short term, as well as medium term. On this basis, we classified your sources of finance. Clear? Yes. As I told you, once if I start writing, you cannot take screenshot. That's why there is a right way, before only you took. Now, The next part will be same. The sources of finance we classify on the basis of what? On the basis of what? Like owned and borrowed. First one is same sources of capital, your own money, or you will borrow from outsiders. What kind of transaction you want to do in this? Equity capital, you will borrow from outsiders, but it will become your own. Preferentials, retained earning means every year you will earn profit 1 lakh, 1 lakh, 1 lakh. Out of 1 lakh, you keep 10,000 aside. Next year again 10,000. Next year again 10,000. Next year again 10,000. Every year you will save 10,000, 10,000, 10,000. All put together, we call it as retained earning. Whatever you have done earning, you have retained, you have saved. Now, convertible debentures. Convertible debentures means any debentures which can be converted into shares. These are called as our own fund. Any shareholders, if we borrow, that is internal. Now, venture fund, already I told you. Next, borrowed, loan from financial institution, commercial loans. And the last part will be debentures. These are on the basis of ownership. In your examination, if possible, try to frame this chart. Now, these things are not required, but in examination, this chart is very important. Now, once you're done with this, the next part will be basis of sources of generation, like internal as well as external. Internal means within the company. External means outside the company. Now, equity capital, preference, retained, convertible, venture fund. Same thing will repeat, but will classify as internal as well as external. Now, external, retained profit, reduction of working capital, sale of asset, etc. These are called as basis of sources of generation. Hope you understood these things. Clear? Yes. So these all about your base of time, base of ownership, base of sources of generation. So if you want, you can take a screenshot of this also. So we'll move for the next one. So we'll move for the next one. First one, long-term finance. Already I explained you everything, but we'll have a small introduction, a brief introduction about everything. Now, long-term sources of finance, like your share capital are equity shares, preference share capital are preference shares, both are same only. Retained earning are internal accruals, debentures, term loans, venture funding, asset securitization. I will not explain you here. Why? Because we already discussed in this chart itself. Now, these are your medium term finance. We call it as medium term. So, which are those? Like same preference share capital, if you given for more than 5 years, then it will be long term. Same preference share capital, if it is for lesser than 5 years, we call it as short term. Similarly, your debenture, lease fund, hire purchase, you already understood. Then medium term loans from financial institutes. So these are called as medium term finance. Next one, short term finance. Short term finance normally comes under less than 1 years, like your trade receivables, any deposit for less than 1 years, anything bill discounted, your factorings, everything comes under your short term finance. Now, your trade credit, factoring, bill discount, advances, short term, receivable and payable, and the last one is any fixed deposit for less than 1 year, we call it as short term sources of finance. So, this is all about your today's session. We discussed about your sources of finance. As I told you, there is a most important topic in your examination, as well as there is a short question in your examination. So without fail, please go through this, and whatever chart I have given, try to write the same chart without seeing the chart, so that you hope you understood the every concept. Thank you.